I almost entered this trade too early because everything looked like it was lining up. But waiting for confirmation is what made this a winner. My name is Bai. I document every trade I take, wins and losses, as I work towards consistent profitability. In this video, I'll break down this EURUSD trade I took during a backtesting exercise over the weekend. In this setup, stacked liquidity and structure aligned, but patience made the difference between guessing and executing. First, we'll review the higher time frame narrative, then the lower time frame entry model, and finally, the lessons that this trade taught me. Let's jump into the chart. Okay, so we have turned the clock back to just before New York session on Eastern Standard Time here. We can see when we look left that we are bearish. We had a swing high, swing low, and then a higher high, which turned us bullish. However, since then, we've been retracing all the way to the point where we are now bearish, since we were able to close a 15-minute candle below this previous low. And that means we're looking for shorts in our current trading session. If we zoom into most recent price action, we can identify a few things. We can see that price action has liquidated London session as well as previous day's London session. So a lot of liquidity is being taken. Since we are bearish, we can observe this price action as basically a retracement up the price leg. If we run a Fibonacci retracement tool from the swing high to the swing low, we can see that we're starting to approach the 50% level of the price leg. If price is able to enter this premium area of the leg, it tells us that we might be in a position to see a reversal and realignment with the 15-minute order flow, which is bearish. Remember, in a bearish order flow, we always want to make sure we're selling at a premium. If you're selling anything, whether it's a football or stocks or an apple at the grocery store, you want to make sure you're selling your asset at a premium so that you can get more earning. And so that's why you always want to make sure you're selling in a premium with respect to the Fibonacci tool in a bearish leg. With that said, let's play price forward to see what kind of price action we get after this red folder event that we can observe coming through at the 9 o'clock hour. Following the red folder news event, we get a heavy move up into our premium area of the price leg. We've crossed over the 50% line, which we denoted with the orange line. At this point, I want to drop down to the 1 minute because I don't want to just blindly short at this location. I need confirmation, which I'm expected to see because I'm also now in the golden area of the bearish retracement. Another confluence that suggests we could be looking for lower prices. Here on the 1 minute, we can see the price action moving into our premium area a lot clearly. I want to identify the level where buyers stepped in to move price higher. This would be the level that I want to then see sellers break and close below, showing me that they are now in control. If we zoom in closer, this blue line is what I'm going to identify as the last level where buyers stepped in to aggressively move price up. Notice the fair value gaps that were created that price since tapped into to further move to higher prices. I identify this as my level versus this point here because this is a level that's been tested multiple times. We can clearly see that this level was tested once, twice, 3 times, and up to 4 times before buyers were able to defend and move price higher. If sellers are able to retest this level a 5th time and close below it, that convinces me that they're in charge and we could see lower prices. That is why I focus on this level and not this one right here, even though it is more immediate to price action, but it could be inducement. So I want to be conservative and identify a level that makes the most sense. Let's play price forward to see what happens. A little after 10 a.m., we get that candle close below the blue line. Notice again that price did come back a 5th time and buyers stepped in once again to defend. But this time sellers were finally able to overcome and close below that blue line, giving me the conviction that they are now in control. Since we have our entry confirmation, let's drop to the 5 minute to see if we can find a viable entry. Here on the 5 minute, I don't see anything obvious, meaning an inverted fair value gap or a fair value gap. So let's toggle to the 3 minute. Here I see something a little interesting, which is this last buy to sell candle. I could identify that as an entry in this situation where I don't see a fair value gap or anything otherwise. There's no real defining order block in this area either. In fact, this whole area could be considered an order block. But in order to refine things just a little bit, I'm going to focus on this buy to sell candle. I'll place my stops at the bottom of the candle, not the wick, but the candle, and place my stops just above this local high. For a target, I'll set my trade at 3R as I normally do, which aligns with a lot of the fair value gaps we see further down the leg as we approach current New York low, which could be a viable draw on liquidity in this bearish order flow. Let's play price forward to see what happens. At the end of New York session, we're in profit and have been flirting with our take profit level. At this point, we can move our stops to break even to help take risk off the table. Since this is a Forex trade, we can leave it on overnight, which works in our favor since as soon as Asia session starts, it moves up to collect some liquidity before tanking all the way down past our take profit for a nice 3R win. The key lesson is this: confluence means nothing without confirmation. Patience is what turns a setup into a high probability trade, because most mistakes don't come from bad analysis. They come from entering too early. This trade reminded me, wait for price to prove it, then execute. I'm not a guru. I'm just someone documenting my journey towards consistent profitability using market structure, liquidity, and price action analysis. If this breakdown helped you see the charts differently, then subscribe. If you want to see another trade breakdown just like this, then check out this video right here. Every trade teaches me something different, and this next video might show you something you've never noticed on the charts before. I'll see you there.